I am going to start talking a little bit here about valuations. So most people, many people, if you're watching the market, the concern is, are valuations for these companies too high? Are we really getting ripe for a major pullback? And I would say to that question, it's a yes and a no. And maybe leaning more on a no as far as high valuations. If you take a look at this chart and you look at the upper right-hand chart where you've got the 5 blue bars, the first bar you're seeing, the biggest one, highest valuation of 40.6, is the 7 tech titans. And if you have been watching the markets at all this week, you'll see that there is a pretty good pullback on the NASDAQ and those 7 tech titans right now. But they're sitting at 40.6. And if you look at a lot of the research out there and you listen to a lot of the money managers, they're saying there's still room to grow there, even though the valuations are at 40.6, just because of the potential for those companies. If you go down the line, the S&P 500 X 7 tech titans, it's sitting at about 19.4, which that might be a little bit edging to the higher side. But I think more importantly is where the equal weighted is, and that's the fourth bar over to from the left to the right, is the equal weighted S&P 500, which is sitting at 16.9. That is not a really high valuation, especially when you look at that center bar, which is the S&P 500 15-year average, is sitting at 16.8. So, all in all, no, I don't think the overall market is oversold at this point. The valuations aren't really high. And you can even go to the last bar on here, which is the Dow dividend stocks, which is at 12.1, which realistically is kind of low. So I think we've got a lot of running room relative to valuations and the forward-looking PE multiples that we see. The chart below, the colored chart, really gives you the history going back to 1995 relative to where the S&P 500 forward price earnings ratio has been over time. And, this last decade, I guess, maybe 2 decades, it's been a little on the high side, but nothing out of control. I'm going to now look at the S&P 500 earnings growth forecast. And this is where the consensus is really kind of saying that it's going to be sitting right around 9.1%. which is really a healthy earnings growth forecast for the S&P 500 as a whole. You look at the blue chart, and this is where City National Rockdale actually kind of breaks it down a little bit, but their total is looking at about 7.5%. Again, not bad at all. It's growth. It's something that the analysts are looking at and saying, again, there is some running room here in this market.